Michael Burry is one of those investors who isn't in the spotlight very often, but when he is, everybody pays attention. Most people are familiar with Michael Burry as the main character in Paramount Pictures' The Big Short, a true story about how Burry predicted the housing market collapse and the subsequent global financial crisis years before anybody had any clue that it was coming. This week, Burry is back on Twitter sharing his thoughts on the current state of the markets, and he's made some pretty scary predictions about what he sees happening in the near future. In today's video, I'm going to be sharing all of Michael Burry's tweets and predictions over the past week, including some that you probably haven't seen because he deleted them just a couple of hours after he posted them. I'm also going to be sharing my thoughts on his prediction. And then I just want to share a short clip of an episode of the Young Investors podcast where myself and Brandon from New Money discuss a pretty funny example of extreme speculation and inefficiencies in the stock market. This is going to be a jam-packed video, so if you do get some value out of it, I would very much appreciate it if you take the 2 seconds to leave a like on the video. And if you want to see more content like this in the future, then consider hitting that subscribe button. But with that said, let's jump into the video. Michael Burry has been using Twitter over the past few years to share his opinion on a variety of things in relation to the financial markets, in terms of his opinion on individual businesses, whether they're in a bubble or undervalued, his general thoughts about the market overall, as well as other things around the economy, interest rates, and inflation. But he actually deleted all of his tweets in April 2021 and went silent for a couple of months. Never fear, because this week he was back and he was not quiet when he came back. He was tweeting a lot throughout the week. A lot of these he deleted, so I'm going to be pulling them from articles as well as screenshots that I took as soon as he posted them. But first of all, on Tuesday last week, 7 days ago from when I'm posting this video, I think, he tweeted this. People always ask me what is going on in the markets. It is simple. Greatest speculative bubble of all time in all things by 2 orders of magnitude. Hashtag flying pigs 360. And there's not too much reading between the lines that we need to do here. It's pretty obvious what this tweet means. It means that he thinks that there is speculation in many parts of the markets, if not all parts of the market currently. And I think most people are interested in figuring out what that hashtag means. That was kind of the most cryptic part of his tweet. And the conclusion that I drew, and there are differing opinions, but I think he's talking about the fact that there's a saying in the markets that bulls make money, bears make money, but pigs get slaughtered. And it's basically a saying that suggests that if you're greedy in financial markets, it is going to come back to bite you. And that makes a lot of sense, considering he thinks that there is a significant speculative bubble going on in a number of different parts of the financial markets. Burry then deleted this tweet almost immediately and followed it up a couple of days later with a few more tweets, which he again deleted. So all of these tweets that I'm showing you are not actually available anymore, but these were the follow-up tweets that he sent on Thursday. All speculation is doing is drawing in retail before the mother of all crashes. FOMO parabolas don't resolve sideways. When crypto falls from trillions or meme stocks fall from tens of billions, Main Street losses will approach the size of countries. History ain't changed. This tweet is pretty similar to the previous one, except he's explaining a little bit more about how the bubble will probably end up unraveling. First, he's saying that it won't resolve sideways, meaning things that go up extremely quickly usually come down extremely quickly, and that's kind of the bubble pop that everyone is expecting to happen. And the other thing that he's talking about here is the fact that the speculative bubbles usually start to break or weaken or pop at the most riskiest parts of the financial markets. And I think it's quite obvious that currently at this moment is parts of the cryptocurrency market. So at the very, very extreme, you have these altcoins or these scam coins that you have now rappers promoting for money on Twitter, which is just ridiculous. Then you have more mainstream cryptocurrencies, the largest cryptocurrencies, but then from there, that's going to flow into high risk growth stocks that really don't have any profits yet, and things in the stock market that are looking extremely speculative. And that again will probably flow into all of the other businesses that have also seen massive increases in their prices, a lot of it being extremely unjustified. He went on to say, the problem with crypto, as with most things, is leverage. If you don't know how much leverage is in crypto, you don't know anything about crypto, no matter how much you think you know. Knowing saves half the battle. Got it? It's not hard. Analyze, think independently, be informed, find data, and you'll know a lot no one else does. In terms of that second tweet, I have no idea about the crypto market and how much leverage is there, but it would not surprise me to know that there is a huge amount of leverage there, considering high returns generally attract riskier and riskier investments, and along with that comes people using things like margin or other types of loans in order to amplify their returns. I think the last tweet that he made there of that group is really, really valuable because it is super important as an investor, if you want to do well, to think independently, because at the end of the day, whatever is consensus is priced into the market. What everyone agrees on in terms of available information and what businesses are going to do in the future, whatever is agreed on is in the price of the business. So you can't use that information to outperform the market. You need to be betting against the consensus in some way or another. For some people like Michael Burry, he likes to dig into numbers that are there, information that is there, but that people are not trading on or that people have not seen yet. For me personally, I'm not that good at going into extremely detailed data for things like leverage in crypto or the housing market, for example. But what I do is I find businesses that people aren't interested in because they're expected to have a bad 1 to 2 year period. Either way, whatever you're doing, you need to be betting against what the consensus or what the market wants. And in my case, I don't need to trade on information that isn't publicly available because I'm able to invest in businesses that people just aren't interested in, because most people want to make money in the stock market in the next 1 to 2 years. And that includes big institutional investors, which move most of the money around in the markets. In terms of my thoughts on his predictions, I don't understand everything in financial markets. Obviously, I don't think anybody does. So for me to make a prediction about how everything is going to change in the future or whether everything is a bubble and everything is going to collapse, I just don't think that's realistic. But in terms of the few businesses that I do look at and that I do understand, I'm seeing very, very expensive stock prices relative to any time over the past 100 years. And that tells me that it's very, very likely that what I'm seeing in areas I do understand is likely what's happening in areas I don't understand. And at the end of the day, what I'm happy to do is invest in businesses that I understand if they're at good prices, and if they're not, I will wait patiently for opportunities to arise. Now, with all this talk of speculation, gambling, and ridiculous things happening in the stock market, I just want to share a short clip from one of the recent episodes of the Young Investors podcast, which is the weekly podcast I do with Brandon from New Money. In this episode, we discussed an extreme example of market exuberance, and this segment ended up being pretty hilarious. Also, if you want to catch the full episode and all of the other episodes, you can either on YouTube, Spotify, or iTunes, and all of the links are down in the description below. We'll start off with a bit of a light-hearted...
I know the headline. You said the headline to me, but I've deliberately stayed away from all information around this story because I want my reaction to this story to be genuine.
Yeah, so
and it sounds like it's going to be something crazy.
Yeah, I mean, it's look, we'll see, but I think this story is a very good example of if you ever needed any more evidence that there is irrationality in the markets at the moment, this is like the pinnacle of irrationality. Like if you think Tesla's stock price is irrational, or like GameStop's short squeeze is irrational, just wait till you see what's going on with this company.
Who was it that was coming out talking about irrational exuberance recently? Was it Monish or was it Charlie? I can't remember.
I mean, Charlie had his daily journal thing where he spoke about irritating bubbles and that sort of thing.
Yeah.
It's probably all of them.
Probably all of them at the moment. Yeah, exactly.
Anyway, but this one was from David Einhorn, who is he does describe himself as a value hedge fund manager. He has like a long short portfolio. So I think Joel Greenblatt does this as well, where they're a value investor, but what they do is they have a system where they can assess every stock, and then they go long on the stocks that are undervalued and short on the stocks that are overvalued. So it's a long short portfolio.
Right.
But he releases a quarterly letter detailing, the results for the hedge fund. And then he also just talks about the general market, as a lot of these investors do, kind of share their opinion and stuff on the market.
Yeah.
And in this letter, he was talking about the kind of exuberance of the market.
Right, okay.
And he drew to this example, which is kind of hard to believe when you go through it. So he spoke about a company called Hometown International. Have you heard of it?
Aerodyne. They make next generation satellites or radar detectors. I don't know.
I mean,
huge military and civilian applications.
I mean, you joke about that, but this is literally the real life equivalent of that. I kid you not. All
right, hit me.
It's kind of unbelievable. So Hometown International is and I'll say this in a very investor way, it's the parent company of a New Jersey deli.
Okay, all right. Like a deli, like meats, cheeses.
Correct,
like
yes.
A deli.
And this, this isn't a chain of delis across the United States or the world.
Right.
This is a single deli.
Right, so this is the deli at the end of your street.
Yeah, so...
in your local shops.
Correct,
right,
yes.
Okay,
and,
okay.
It's, it looks interesting from the front. You should go look this up on CNBC. Look up this story after you hear this. And it is a single deli that decided to list on the stock market.
Wait.
Which, first of all, that's just a little bit ridiculous.
How do they even do that? Do they IPO this thing?
I don't know.
I guess it's just like a direct listing. We'll talk about direct listings a little bit later. Does the company just like, hey, I don't even know if I had a deli or any shop for that matter, I want to go on the stock exchange. You'd be laughed out of an IPO, but it's like, what do you do? Do you apply for a ticker symbol and then you're on?
I don't know. I mean,
I got no idea.
Yeah, I believe it trades over the counter, so you can't just like trade it on most brokers. But
okay.
It is listed on the stock market, and it's a really great business.
Revolutionary founder
Yes.
takes his deli business public.
Yeah.
So what happens next?
So he took it public in 2019, and if you look at their annual reports over the past 2 years,
yes,
the deli has produced a total combined of $35,000 in revenue.
35,000 over the 2 years.
Correct.
2 years or 2 and whatever. Around about 2 years.
Yes,
yeah.
about 2 years. Yeah. So the CEO is also the CFO, the COO, the treasurer, and the sole director.
I love this guy. What a legend.
And on top of all of those responsibilities, so
Yeah.
he's managing a huge company, 35,000 in revenue over 2 years. He's listed on the US stock market. On top of all of that, in his part-time, he's also the wrestling coach of the school next door to the deli.
Oh, this just keeps getting better. All right, so we got this macho guy that runs a deli that's made 35 grand in revenue.
Yeah, part-time CEO of a massive corporation, massive global corporation. Part-time wrestling coach. For the school next door to the single deli.
All right, yeah, sure.
So I thought we could do a bit of evaluation on this company. We could kind of feel around and kind of see what it's worth, because maybe we want to invest in this. I mean, it is public after all, and we invest in public companies every now and then. That's something we do. So. Yep. 35,000 in revenue over 2 years.
How much cash flow is he getting out of that?
So in the latest financial year, they had 600,000 in expenses.
600,000 in expenses? Legitimately? How? Why? What?
That's all we've got. That's all the article gave me.
Wait. Okay. So $35,000 in revenue across 2 years.
Yeah.
In the last year, $600,000 of expenses.
Yeah.
That's gone to
he's
somewhere.
He's investing in the future of the business, Brandon.
Okay. Okay, sure. He's really stocked up. He's just all of that. He's taken on huge debt just to get like the next 50 years worth of cheese and meat.
Yeah, he's stocking up for the winter. Yeah. So
there's not much in terms of cash flow out of this deli.
No. Quite the
opposite.
Quite negative.
Quite the opposite.
Yeah.
Okay. Well, so first of all, I would not be buying this company.
Right.
Because I want it to make money, right? That's a rule I should follow, right, Hamish? But some people
want to make money, yeah.
But some people are buying this company, I guess.
They are. I want everyone to take a guess. If you're on the YouTube version, go into the comment section and give us a guess of what you think this company is worth in terms of market cap. So the value of all of the shares.
Well, it's worth nothing. Oh, sorry. It's got to be worth at least a couple bill. At least a couple
bill. Yeah. You're not that far off. This company, once again, 35,000 in revenue, 600,000 in expenses, is currently listed for $105 million.
$105 million.
$105 million.
Pause for effect. $105 million.
And it gets better.
Oh, really?
The story.
All right.
Oh, the story's not over.
We're just winding it up.
Yeah.
All right, sure.
This guy is he's a genius. This deli guy. So I had a look in the a little bit briefly through the 2020 annual report. For the vast majority of 2020, the deli was closed due to the pandemic.
Of course it was. Of course.
And despite that, the stock price rose from $3.25 to $9.25, and today it is $13.50 per share.
Jeez.
So it's up 4x on the year.
That's crazy.
It is
Man,
insane.
if you're that guy, aren't you just like, I got to sell this somehow?
And that's exactly what he did.
Oh,
he did
actually?
a share issuing.
Oh, right.
He went and raised.
That's actually
He did.
legitimately. So I'm not even looking at the notes here. I'm going at 100% off what you're telling me right now.
That's exactly what he did. He's probably sitting there thinking, wow, this is a little deli. Somehow we're worth $100 million. How can I squeeze some money out of this opportunity that I've somehow created? He sold 2.5 million shares and was able to generate over $2 million from the financing section on the cash flow statement. So,
wow. Good on him. So what?
yeah.
What's he going to do?
I don't know, pay himself a big dividend.
That's it. Is he going to open any more delis? Imagine if he opened just one more deli, maybe in the next street down, then his company could be worth like $200 million.
Correct. Yeah. Maybe you could buy the school. And then, you know.
Oh, he could do, because it's a parent company, right?
Yeah.
So maybe he invests in the wrestlings. Maybe it's a deli and a wrestling business.
Wrestling team. Yeah.
He's going to own the wrestling team, and they're going to promote his deli products at every fight. That's genius.
That's it.
That's what.
No, but
this is clearly, all jokes aside, this is ridiculous.
Of course.
This is the dumbest thing I've ever heard.
Yeah.
And I've heard some dumb things. I've known you for a while. I've heard some dumb things.
Yeah. The crazy thing about this is we're right over my head.
Even respond. Anyway, the crazy thing about this is...
the crazy thing is $600,000 in expenses. So clearly he's just like using the capital raise, which shouldn't even exist. This is a deli, for God's sake. And
one single deli.
And what business expenses is he buying?
That's what I'm
with
wondering.
That $600,000.
We've been talking for a while, and all in the back of my mind is like $600,000. Like, what the hell is he doing?
Maybe he has a private jet now.
Yeah, maybe. Who knows? But this is irrational exuberance. It's worth $105 million.